Hi guys, welcome to the Forex ELITMENT known as TFE. And let me reintroduce myself. My name is Shaquel Samaai, and I'm your mentor, educator in this model, or you could say mentorship if you take it like that. On the other hand, guys, this video will be about the TFE daily bias, which is basically a model that will help you to understand previous daily highs or liquidity levels thrown to or pivotal frames for reversals and continuations to happen on. I'll be using this cursor here, so you guys can follow the cursor. Keep in mind, right, that if the market is more likely, to attract it to the highs or low, and if it is it going to be respecting it for reversal or continuation in that same direction it is currently going in? Very important. So you always have to ask yourself, is market attracted to the high or low? And if it is also, when it's there, is it going to act as a reversal or continuation? Two things of those things can happen, but also I would say it's more of three models that can happen. As you can see right here, you have targets, highs, and lows. And right here, we want to know what will the previous day and what will the next day be doing, right? So using the highs and lows of a daily high and daily low of the previous day, we'll be able to understand if the market for the next day will go in, be buying, selling, and where, if it's going to buy into or sell into. Also, if it's going to be buying into area and then reverse off, where, what price will it reverse off from? Or if it wants to continue, where will that, or what price will it continue from? So I'll be going over the first as this is a little thing I've made for you guys. And before I go any further, guys, I do have a free Forex community where I do host at times streams, share information, motivation, and I do share things to reach your higher consciousness as an individual, as a trader yourself. And if you want that, you can just click the link in my description. On the other end, guys, let's begin on to the three models that could help you to understand where the next day will be heading to. And once I'm done with this little layout here, I'll be heading over to the chart to show you guys how it plays out on the chart. First up, we have the target highs and low model. And this is basically, you can see this here, we have a day closed, right? So you have the low of the day here, the previous day, and then when market went all the way high, we have the previous daily high. So lining that off with the nice horizontal line or line, trend line, the next day you can see is attracted to potentially the previous daily high. And market opens, tries to get the low, but then eventually goes up. So it's more likely to go to the previous daily high. On the other end here, you can see market sells off and more likely to go into the next day, previous daily low, which is this year. So we spot up the high and the low, and when the market opens, we're looking for possible sells off into the previous daily low. On the other end here, we have reversals on highs and low model. And this right here is basically we might have a big bullish candle, and then the market first opens, runs down into the previous daily low, giving some sort of rejection, collecting orders and wicks up again, and now it's potentially trying to go into the highs again, or just trying to buy into the 50% of the previous day. On the other end here, we have where market has a massive bearish movement right here. So you can see market drops all the way down. Market opens the next day, and now because of that, we can see market shoots into the previous daily high, collecting the orders, and now it wants to reverse off into the downside. So it's reversing basically. So you see here market goes down, but now reverses off from it and wants to go into the high. This one market taps into it and reverse and wants to continue going to the daily low. These will be explained more further on the actual chart with how to get those entries. On the other end, we have continuations on highs and lows model, and this is basically where the market wants to continue in the same direction. You can see the market has a massive bullish candle, high, low, and the next day breaks above it. And when the market breaks above it, it has on the lower time frame some sort of retest on this previous daily high, and it continues buying higher. Same for the sell side, you have the massive bearish candle, market breaks below the previous daily low, and on the lower time frame, we have some sort of retest on the daily low, which continues to the downside. This trading model is very important to understand. It's not used for swinging trades, it's more used for scalping as well, intraday trading known as day trading. It's really helpful, and I'm about to show it to you guys how it works on the chart. With that being said, guys, please do like this video if you're enjoying it, and don't forget, guys, to like, comment, and join the free community, and don't forget also to subscribe. Now onto the market, guys. You can see here's the TFE precision concepts, and I'm gonna just select a random time in the market for you guys just to see how the market plays out. I just gonna close and just select some random place. Okay, so follow with me nice and slowly. You can see here we have daily massive bearish candle going down. Now it's more likely to continue going down, but we have the daily high right here. Okay, should make this nice and straight also. The daily high, and we have the previous daily low. Now, from our understanding, market is either gonna open up, reject off here, and reverse to the downside, or market's actually gonna what? Go all the way down, trying to take out the lows. So market either is attracted to the high, attracted to the low, and if it isn't, it's also gonna what? Either reverse of this area, or actually come down and reverse of this to up. The other thing you can do, which is a third model, it can break above it, retest on the low time frame, and buy from here. The same for the downside, it can break below, retest, and sell off there from a lower time frame. Now, we didn't yet show you guys the entry model, we're just showing you the daily bias. So let's see what happens. You see beautiful market opens, tries to go low, but boom, takes it all the way high, and it takes out, as you can see right here, it takes out the previous daily high. So there was some sort of continuation here in this market right here somewhere. Okay, now we take that candle, the daily previous daily low, then previous daily high. The same thing we can say right here is that we have the high, the low. I can name it for you guys so you guys can keep previous daily high, so you guys can keep track of what I'm sharing. And here we have previous daily low. Okay, so market again, what can happen? Market can either try to go into the highs, right, targeting as like the target place, or open up, try to go to the lows. Okay, that's the first model. The second model can be a reversal where market goes up into the highs and then actually sells off afterwards. So basically we see market do this, go up, and then start selling off, right? Or it goes from the bottom, opens up, and then actually goes all the way down and then rejects back up. That's a reversal model. The other one is continuation, which is more likely to happen this year. However, we don't want to just go for plain simple candle. We want to know the entry model. And if you guys want to know the entry models, you know, all you have to do is make sure to like this video. Let's get it up to 1,000 likes and the comments up to 1,000 comments, and I'll share more of those entry models. Another thing, guys, the continuation will be market going all the way up, and then on the low time frame, boom, and there we go, all the way higher. Same with this one, all the way down, and then there we go. So let's see what happens. Then we add the continuation model, and you see market takes out the previous daily high. The same right here, market is going to be either attracted to this one or attracted to this one. And now let's watch what happens. There was a nice, beautiful reversal one. You can see if I go back to it, I'm going to explain to you guys again so you understand. Here we have the previous daily low right here, right? Previous high. And I told you guys, there's three things that can happen. The three models that can happen. It's either market's going to take the high, right? Respect it, that's the buy point, or sell all the way down and respect it there. What can also happen is a reversal level, which is market goes up, creates a wick, and then actually drops back down. So it will look like something like this, like I said. Goes up, creates a wick, and then drops down again. And exactly that is what happened. Beautiful, right? Now, this is just to show you guys that, you can have some sort of clear direction what the next day can potentially do, and you're more likely going to be right all the time because there's only three things going to happen. Okay, there is the one thing that can happen. It's maybe the next day doesn't have enough volume to either take out the highs and lows, and that'll be a no trading day possibly. Okay, so you can see there's a daily high. It's definitely either going to just take out the lows and continue to a continuation down. It's more likely to do that, or just actually do a reversal of those highs. What it can try to do is actually just go back up, reverse of here, go down, or actually be the target point from here to the high, or the third model break above and be the continuation, continue going higher, right? So you see there's three models all the time. Let's see what happens with this model right now. Wow, that's crazy, eh? The continuation is really good. You can see market opens up, does the retest collection, and then all the way back down. So that's a continuation. So on the low time frame, there was some sort of continuation model, basically entry model for the continuation to happen. And that means where the sales runs up and follows the actual candle from the previous day. We'll do another few more examples. You have another one right here, previous daily high and low. And then we're going to see the market either go into the daily high or daily low. Oh man, I didn't see this. I didn't name this here. And I hope you guys were sharp enough to see that I didn't label it there properly. Sorry for that. We have the previous daily high, previous daily low. Market's going to be attracted to one of those two things. And there we go. Attracted to the previous daily low. Now, same thing here. We have the daily low, daily high. It's going to be attracted to one of the two. And there was a continuation. Market broke down and continuated. Here we have another one. And I think by now, you should be able to understand what I'm trying to say. They had a continuation on the low time frame once it is to continue. By now, you should be able to understand the model right now, the daily bias. With this simple thing, you can be able to spot the market's daily previous on the next day's daily move. Going to live market right now, guys. As you can see right now, we have already the previous daily high. If I could just, this is live market right now, so I'm just doing a live analysis for you guys. You can see right here we have the daily high right there, right? And I'm gonna just type that out. And we have the previous daily low right here. And now, remember there's three models. Three models. What are the three models, right? There's three models. Let's write them down. The first one, right? Market targeting targeting high or low. Second model is reversal, right? And third one is for continuation. Remember the continuation that we have? Market can either do one of these. It's either going to continue in the direction, right? Or actually So it's either going to target the highs and lows, okay, um, or actually reverse off a level, or it's actually just in a, what we call the continuation, okay. So it's either going to do one of those to do the continuation, which I morely favor in this scenario right here. I morely favor the, let's see on this one right here. If it does go, okay, let me just see. If it goes into highs, targeting already, I saw it's like, if you look at it right now, it's already broke. Look here, it's already targeted the highs, so it's already targeting the highs, right? It's not my trading time yet. So previously, if it was trading time, it's out my trading time. So this is out my trading time, and this is a little more extra for you guys, right? Um, I won't be looking for this. It's going to be one of this. It's either going to be this, either this or this, right? Because why? My trading time is the New York session, and we already did the targeting high. So for it to target the low means it's just going to be a reversal. Or if it actually breaks completely above, it means there's a continuation to continue going higher. So now my next things from that understanding I just explained to you guys right now, I know in the New York session, I'm not looking for targeting daily high. I'm looking for either it's going to go to the daily low, it's going to be a reversal, or it's actually be a continuation, which is breaking up the daily high and continuing all the way higher. You see, there's only two things right now that can happen with this. So I'll go on a lower time frame and try to see what's happening with this area right here. And is there anything here for me to say continuing higher? Of course, it's another entry model, which I'm not going to explain right now. But with that being said, guys, I hope you guys enjoyed this lesson. Quick, short, straight to the point. And welcome. Let me just reintroduce myself. My name is Shaquel Samaai, and I'm the mentor educator at TFE, the Forex ELITMENT, and I'm teaching the TFE precision concepts, which is authored by Shaquel Samaai. And there's a lot more for you guys to learn. And I hope you guys really enjoyed this one. With that being said, peace, love, happiness, and I'm signing out.